think about this. Everyone is panicking, and they always ask you as a trader, does it feel panicky? It hasn't felt panicky up until when Netflix really fell off the cliff. That was the next leg. So people are starting to look at the economy and saying, how is the underlying economy? That's all that an investor should care about. The underlying economy is sound. Manufacturing PMIs are good. Europe has been beating. Asia has been beating. The only weakness that we saw in the U.S. was on the service component, and that was caused from the Omicron virus. So I don't know why people are panicking over the economy, because now if you have the Fed, who Goldman is tripping over themselves to raise, to increase how many times they think the FOMC is going to raise rates. What happens if the FOMC only rates half of what the market has already digested? We rally.
Right.
What happens if they raise? So my point is, if they raise less, then what happens to the dollar? The dollar comes in, so that decreases the pressure on the front end of the curve, which will increase the steepening of the yield curve, so value outperforms in that scenario.
But I so agree with you. And if someone asked me, I'd probably give them basically the same explanation of how this is all likely to play out. But what if this year is different because they have to keep tightening?
Why would they have to keep tightening? If they have to keep tightening, then they're robotic. They have to react to whatever the pressures are on the economy. So if inflation, they said transitory, everyone says they were wrong. It depends on what you call transitory. If you would agree with me, and they would agree, that a tremendous amount of this pressure was caused to the supply chain due to the pandemic. In every metric that we can look at, the pandemic is subsiding. Everyone would agree on that. What does that mean? Inflation should be coming in. So if they want to get robotic and just raise rates in the face of an abyss, then they can do that. But I don't think they're going to do that.
Well, let's boil this down to where you're positioning. So are you positioning then kind of the value trades? What are some examples of what this all should look like? What should people do right now with maybe some of the opportunities this market is giving them?
Yeah, so I think value is going to, we're not looking at 2020 when people thought that the pandemic was going to ruin the economy. We're looking at an economy that has recovered or will recover. So you want to be invested into the value names, the paper names, the chemical names. But let me tell you, Kelly, very hard to convince someone not to buy Apple. Very hard to convince somebody not to buy Facebook. I own Apple. So Apple for me is a lifelong event, not a cyclical event, not a buy the dip event. So yes, you can buy large cap tech if it's your fear mechanism to do so. You could hold large cap tech, but you should be invested in value plays right now, and that's where you should be looking for bargains.
Quick name or two.